So I've got 5 stocks that have been naughty this year and 5 stocks that have been nice. These stocks right here are always making highlights. They're making new highs. I mean, these stocks really are just on fire, and they've been on fire all year. So I'm going to cover the 5 that I feel are the most naughty this year, and I'm going to cover the 5 that I feel like are the most nice. Now, the 5 that are in the nice category, I'm actually owners of all 5 of them. That doesn't mean that the naughty category are bad stocks. I actually love these companies. I'm just not so sold on the stock themselves. I will be looking for a strategic way to enter these stocks going forward, as I feel like every single one of these are really accelerated growth companies, and I really think you could highly consider owning any one of these 10 stocks. So please enjoy, guys. This is my video on naughty or nice. Just to kind of give you guys a different perspective of what I'm looking at here. The first chart here, I'm going to start with the naughty list first. This is Alibaba. This is a stock that I would really love to invest in right now, but you're going to kind of see some themes here when we're looking at these particular stock names. They all really have some pretty impressive chartings. You know, most of these valuations are actually pretty high. The PEs are sometimes in the hundreds. Alibaba's PE actually really isn't that bad. I think it's in the 50s, close to 60. Really not bad. So they're making killer money. And I'm going to be looking to take a position in Alibaba right now. But again, just in the naughty list right now, because I mean, it just, a stock chart really just does not get any better than this. And I think a lot of people, when they look at this and they're a new investor, they're like, I've got to have a piece of that. There is certainly some you know, something to be said there for a stock that just runs up into the stratosphere. And I'm going to show you better charts too of some of these other naughty, Amazon for sure. But as I kind of click through these, you can kind of see just a general theme here. But this is Alibaba here. And then we're going to work kind of backwards, and we're going to work and take a look at Netflix here. Netflix, similar situation here. I mean, you've got some areas here. If I can zoom into this, I'm on NASDAQ charting right now, you guys. This is a fantastic tool, one of my very favorite tools for looking at actual charting. But you see here, I mean, this is just insane. From July to August, the stock basically just went straight up. I mean, there's no denying that. And it's a stock I would love to own. I mean, right now I'm kind of being a big sissy when it comes to these stocks. I can't pull the trigger. And if I could, the only way that I'm going to be able to go long these stocks is to own a small piece of them, because I just can't see putting a huge piece to my portfolio in these particular names. These are all 1-year stock charts that I'm looking at. You guys can get in here and use NASDAQ.com and take a look at these for your own. And Netflix, I believe, is another one where it's got a really, really high PE. Tesla, there is no PE for Tesla because they haven't made any money yet. But for a $300 stock, I mean, you can just kind of get a sense for how crazy this stock is. I'll give you a little bit better perspective here. Again, this is the 1 year. There's the 1 year. Yeah, refresh it, and there's $315 right now, the current stock price. I mean, this stock is just all over the place. I mean, had you bought somewhere down here, you would have been fine. But just a stock that's basically run up into the stratosphere, and the best I can explain Tesla is that people are investing on a dream. And I tend not to do that with my retirement funds. And I've had people ask me, you know, should I invest in Tesla? And you know, my answer is yeah. If you're really into the stock, I have no problem. I love the company. I just hate the stock. But don't keep your holdings less than 5% in Tesla or any one of these naughty lists. So number 4 on the naughty list is Amazon, of course. This is the one stock out of the entire naughty list that I've actually invested in this year, and I've invested in Amazon multiple times. I mean, I have short traded this many times. I've been successful on every time, because I mean, had you invested in the stock basically at any time and held it, You could have sold it for a profit. I mean, this thing has just gone basically straight up. I mean, here's that spot that I've already covered for you guys in that 26-minute trade I did in Amazon. But I mean, it's almost as if after today, this is Black Friday, I'm making this video for you guys. But this is just absolutely shooting off into the stratosphere. I don't even understand what's going on here with Amazon. And you almost look at the year-over-year return, and I think it's only up 55%. So really not that great, what you'd expect out of when compared to some of these other names that have run up a few 100%. And the last one on the naughty list that we can talk about is Nvidia. Now, keep in mind, all these stocks on the naughty list, I love these companies, I really do. I just can't, in good conscience, pull the trigger on these stocks right now in their current position. You can kind of see here what it's done over the last year from January, and here it is. It settled out today, Black Friday, at $216 a share. It's just insane run for these companies. I mean, and good on you if you've invested in these all year and you just held them and rode the volatility. Good on you. I mean, you're really riding a wave of super high PE here. Just super growth, basically. I mean, these aren't even growth companies. These are super growth companies. And I just thought I'd kind of do a video to just kind of show you guys a little bit of a stock perspective here. And these are my nice list. This is what I've got here, starting with Apple. We're talking about a PE here, I think around 15 or 16, maybe 17 on Apple, so very under control. CRM Salesforce, I'm not really sure how I feel about this. I actually just exited my position in CRM right before they reported earnings. I just wasn't feeling it. I sold it. It was the right move to sell it. But this particular PE is actually quite high too, but I really like this company. I like the growth. The market cap is huge. They're making really, really good money, and I think you could invest in this on the long term of the safe. And then we've got Facebook, of course, on the nice list. A stock, again, that's run up quite huge this year, but a stock that I actually own currently, and I'm actually getting long Facebook. No more screwing around. I think this is probably one of those stocks that I'll look back at this time and be glad that I took a position of it. And Google, kind of the similar situation with also a PE that's actually under control. Little more jagged stock chart here, but certainly very impressive. Anybody who owned Google throughout the year this year has been rewarded. And then finally, my newest position in my stock portfolio is PayPal. And I actually owned PayPal somewhere down here when it split off at eBay. I got free shares of it. Sold the stock somewhere around here. Obviously prematurely. When the stocks run up here, it's at $78 a share right now. So that's pretty much it, guys. That's the stock analysis piece for the naughty and nice list. So kind of hopefully you guys enjoyed, and I'll kick it back over to the main studio. Thanks, guys.
So I've just come back out of the charts, and the reason why I wanted to come out with this video covering these 10 stocks. These naughty stocks are the ones really that are the most tempting. Every single day we're watching them make new highs. It's really tempting a lot of investors to get invested in them. And I'm not saying that there's not a lot of money to be made in these 5 naughty stocks, because there's a lot of money to be made amongst these 10 names. These guys are cutting edge. They're basically changing the technology landscape for the better in each and every one of their particular businesses. But I would highly encourage you to take a strategic approach when entering into these. Do I think the naughty category should be heavily weighted in your portfolio? No, I don't. I think it should actually be the more aggressive piece to your portfolio. And I usually set a ground limit of about 5%. No more than 5% exposure in these high growth areas, guys, because as quick as they can make you money, they can actually lose you money. Guys, I hope you enjoyed this version of Naughty and Nice. If this is your first time tuning in to the Independent Investor channel, I highly encourage you to subscribe to the channel. If there are stocks that I missed in the naughty and nice category, please offer your selections down below in the comments section. If you agree or disagree with my naughty or nice stock picks on this particular delivery, offer those comments down below. If you think that anybody out there would benefit from the information that I'm putting out, I put out lots of informative videos for the new stock investor and investors that have been investing for quite some time, with the intent of really providing you guys information on what I do as a self-directed investor. Guys, so share the link if you know anybody out there that can benefit from the information. And thank you so much for tuning in, and good luck in your investment future.